We have a lot of movers to focus on as well. Jenny Horne, host of Next Gen Investing, is with me, and we're taking a look. We're staying on the crypto theme here with Coinbase. Big week for crypto. What are you looking at when it comes to Coinbase this morning, Jenny?
Yeah, and I know that Bitcoin and the entire crypto world just closed out September better than feared. October, historically, actually a pretty strong month for crypto and crypto-related assets. So we'll have to see if that pans out accordingly, as September obviously was not nearly as bad as markets had been fearing. But for Coinbase today, seeing some analyst news, as we've seen an overall definitely resurgence in interest of some of the Coinbase narrative, especially because there's been such key legislation passed this year in relation to stable coins, as well as the U.S. really framework right now that's being laid out for further crypto adoption and ease of access. But Rothschild did upgrade Coinbase shares to buy from neutral with a price target that was raised substantially to $417 a share from $325. They do still expect compression in the company's take rate over time, but believes that its retail volume growth will help mitigate this, and now sees strong growth for Coinbase's institutional trading, reflecting now its growing institutional adoption of crypto assets and the strength of the company's positioning following its investments into derivatives capabilities. So all that to be said, Coinbase has had a really phenomenal week, and we've seen, again, the recent run-up in shares help erase some of its recent just range-bound activity. I wouldn't say it was underperforming, but now with the recent run-up in shares, we have pulled back about 16% from highs of around $444 a share. We're a whopping 161% off of lows that were touched, just back in April. And we also have now risen 45.5% on the year. And I know that the close correlation to Bitcoin itself has often been a narrative of Coinbase, but there's also a lot of other now proxies that are a bit closer to Bitcoin. Doesn't trade with the same correlation, frankly, that it used to Bitcoin, but it is still our only publicly traded really company that operates in the crypto trading world. So for that reason, it's not the only name in town anymore, but it's definitely one of the biggest, and definitely getting some love from the sell side here, as Goldman was another analyst that also raised its price target today, 363 from 351 with a neutral rating.
So I see 417 from the Redburn, and then the Goldman Sachs 363. And look, well, it's 372, so that's not particularly great there. What about Applied Materials out with a revenue warning today?
Yeah, this is really interesting. So we're seeing some weakness in Applied Materials this morning, as well as actually other chip-making equipment peers like Lam Research, KLA Corp, also dropping early this morning as these new export restrictions are threatening to hurt their business in China. So Applied Materials expects a $710 million hit to its revenue from new export restrictions published by the Bureau of Industry and Security. That change means it won't be able to export certain products now to China-based customers without a license, the company did say in a filing on Thursday. But the new rules are expected now to reduce Applied Materials' fourth quarter revenue by roughly $110 million and 2026 revenue by roughly $600 million. So Applied Materials down the most substantially of the bunch, about 3% this morning. But these moves are only set to put a pretty small dent in what has been an impressive gain for a lot of these chip-making stocks over the year, driven by this now increased demand we've seen for various wafer fab equipment. So Applied stock has climbed 37% this year. As of Thursday's close, Lam Research is also up 104% on the year, and KLA has risen 81% over the same period. So China did represent about 30% of Applied Materials sales for the year so far, and the company has signaled a pretty meaningful drop in that Chinese revenue. But right now, we're likely to see about a 10% quarter-on-quarter sales drop, what's being anticipated at least now in the fourth quarter, per a note we got from Stifel. But they expect right now this to be wide felt. This is obviously not just an Applied Materials story, but when you consider, again, exposure to some of these entities like China and some of these regions where we're just seeing these frayed relations and also uncertainty, I think it's natural to see a pullback, especially for a name like Applied Materials, which has been, again, a real nice outperformer on the year, but more particularly over the last quarter or so.
Okay, Jenny Horne, great to see you, and we'll catch you later on Next Gen Investing. Thank you.